Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for visiting the lab today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis to overlay trades on in the intraday developing time frame. It's based on the TraderLab and structured trades that are available to everyone at no cost, as well as the TraderLab community. And it is really about the business of trading. This is the idea of the TraderLab, is to help you maybe save some time and maybe help you separate, shall we say, the noise from a process and understand the actual business you're trying to be in. So those of you who've been following the stream, I suggest all of you review the previous streams because each of them build on each other. And let's get started. We have a lot to talk about. Now, today is FOMC, which is very important. We had a report this morning on inflation, not so good. And if you've been following the stream, remember yesterday we talked about market rotations. How does the market work? Why does it do what it does? How can you develop a plan to get in alignment with it? And of course, like everybody else in this business, we all take stops, and it's not about a being right business. It is really a business of alignment and statistical probabilities. At least that's been my experience, and I think I have a bit of experience. I started trading probably before most of you were born. So that'll give you a little perspective. Now, this is what the structured trades look like. There is no plug and play in trading. If it was that easy, we'd all buy a book, plug it in, and move those ATMs in the basement. So I guess that doesn't work, right? So I read all the books, went to seminars, and when I started, there was no internet or PCs, but the point of the matter is I took all the information I could get, and I accepted the information as fact, when in fact, most of it, or I would say all of it now that I think about it, was just random. So they all have random winners, and if you open up your software toolbox, why are there 100, 200 indicators in there? Here's why, in my opinion. They all have winners. They all have random winners. But here's the problem. We look at randomness and random winners as a successful process that just has to be improved. What would you do if you knew? Now, you have to do the work to know, but if you knew that that trade that has all those random winners, those patterns, all those things you do actually have a negative expectancy, what that means is you're going to be a loser even though you have random winners. And the simple equation to think about is gambling. Gamblers have winning hands, but the house only play games with an edge, and the dollars over a random distribution of outcomes move from the gambler side to the house. This is really the business of trading, and let's be sure we're solving for the right thing. And here's some more of these. Some are actual trades, some are just screenshots. This is from 2020. And this is because other traders were asking me, what are you doing? And the other thing is, a lot of this is was never intended as anything. It was research. So you're going to see order flow phenomena and a lot else. And of course, without coming to TraderLab, this will not make any sense to you. Wouldn't it be nice if it did? But there is no plug and play, unfortunately. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and paper, take down a couple of notes. Remember, you have to vet everything for yourself. This is not a trade calling room, but if we get there, we'll talk. Now, let me show you the higher time frame and let's get into this. All right, this is the higher time frame. Now, this is the day before yesterday. Now, as you guys know, this is an over-under. The buyers were here and reviewed the previous streams because I don't want to spend time. This is kind of like, if we're under here, not so good. We tested under here, and the market is short. Look at this. Think about this in all time frames of rotations, what I'm about to say. What does the market do? The market goes down to go up. Why does it do this? Because there's buyers built into the short side. If it goes down, and now I have my buyers built in here, I go up. What happens here? I got my buyers in here. I go down. I get my buyers in here. What am I doing? I'm going down. Now I get my longs in here, going to the moon. This is resistance. I went over all of this previously. I'm not going to spend time. If this is too high, this is like a retail price in your store. I'm not paying that. It's overpriced. What happens? I got longs in here. That becomes the fuel for the shorts to take them out. I take out the longs in here, and what happens to these guys? Hasta la vista, squeeziteria. I call it the squeeziteria. Now let's look a little further. If my shorts are in here, what can I do with this? Well, if I understand market mechanics, and you can learn this in TraderLab, of course, you have to do the work because it's all random also, so that adds that other element of trying to be right and predict, which unfortunately doesn't exist here. That's an excess. When I come across here, where's my fuel? My shorts are in here. Squeeziteria, right? Now, let's just look. I go higher. I get longs in here. Continuation. And then where's my fuel? It's in here. Down I go. And now I have a gap. This is important. Now I got my shorts in here. What happens over here? Go down. And this was Friday. Close on the low of the day. Oh, it's terrible. Gap higher. And then what? My shorts are in here. And then what? Buy stops are here, and there's the gap. Okay, and this is was our target, and you'll see how this fits together. So what do I know? Short, gap, short, short, Friday, gap higher, squeeze, looking for this. On this day, it didn't do it. Let's go take a look, and then we'll get into today. Now, what do we do? This was our target yesterday. Now, this is yesterday. How does the market work? Up, down, up, and then what? We're out of here. What did we do? The shorts and the gap. If we found too high up here, up there, who knows, up there, all of this is suggesting, we'll see you later, I'll send you a postcard from the edge. This is where the shorts get squeezed. Now, who's getting squeezed? The weak shorts. If they get squeezed and we close here, what might that suggest, Tom? South of the border, we'll catch you later. And yesterday in the stream, I mentioned 55 was a potential target, and that's in this distribution of volume. I'm not going to take time again with it, but it works like this. So if this is too high, and we can come out, and don't forget we're filling a gap, squeezing, trapping longs, and then we close the door on the longs. What's in here? Sell stops, and wherever. Okay, and 86.25 is a potential target, not a recommendation. It's on the hit parade. Same as this, 55. So what does that do for us today? How about south of the border? And now I'm going to show you what it looks like today. And where was our target from here? 55, right there. And if we get below it, how do we use it? Sell it, maybe. And I say maybe because I don't know, right? Is everybody with me? Give me a like if you're in YouTube. How we doing? Everybody conscious? I keep hearing thuds from YouTube. I figured that's heads hitting the keyboard or something. Are you guys doing all right? How's TraderLab doing today? Do you have your trade plan? Are you managing your emotional stimulus, your fear, your FOMO? When you get these kinds of rotations, you need to understand the humanity. That is primal wiring. And this is what we work on in TraderLab. Not only do you need to learn how to trade, you got to learn how to manage yourself. And that's something you've never had to do before because you've never been in an environment that's this. You can imagine what it is, but unless you get good education, you're just going to be looking for the plug and play solution. You're still passed out? Yeah, okay. Oxygen is going your way. All right, so based on what we know, let's look at some of our levels and context sheet. So we're opening out of range a gap. And here's the question. Now, here's the thing you have to think about. When you open in a gap, and now we know the market, let's put it this way, we don't know anything. But let's suspect maybe we're in a bear market currently based on the structure and based on the profile, which is really measuring participant behavior. In other words, what's too high, what's too low, and what's a fair price. This is shopping. Now, the other part of this is it's happening inside itself or in multiple time frames. So when you start thinking about trading, you know how we talk about higher time frames, short time frames, and we're day traders. But here's the thing. When you begin to get educated, or if you come to TraderLab, what you're going to start seeing is that the market is inside itself, or a vertical integration of time frames. Now, I know you guys think about higher time frame, this, that, boom. And most of you use time specifically, weekly, monthly, 5 minutes, the clock. The behavior of the market is not clock based. Now, so in other words, it isn't, you can slice and dice any way you want. I'm not judging you. I'm just telling you what I figured out because I've done everything you've done. And again, it's my truth. It's not necessarily true for you. Because in the end, what is true? What becomes truth in trading is statistical probabilities. That's tangible. It's true. Everything else is noise. And a lot of the things you see are just random. So any of these educators out there, and all trades are random, but you have to vet everything to know that it's actually an edge and not just noise. And that's where we kind of get slipped up because of the random winner. So every trade, here's the other thing, get a random buy-sell generator. You're going to have winning trades. What does that tell you? By the way, it's still shorts here, but these aren't recommendations. Now, context. We're opening out of range in a gap. What does it mean? The market's out of balance. What does that mean? We're rejecting what's above us. Now, there's another piece to this. The ETH inventory is short. What happened in the ETH? We're out of here. We had a report, and actually bearish, if you will, already set up in the TraderLab yesterday and the day before yesterday. We were already looking for short squeeze to get short. If you understand market mechanics, which takes time to think differently than most other retail traders, who of course, as you know, statistically don't have a very good survival rate. In fact, it's rather abysmal. Then we have to do, what I found for myself is, think like a retail trader, but don't act like one. So we want to use our experience and the class we took or the investment we've made, not to keep repeating what doesn't work and trying to fix what might be a defective process. So let's go. So knowing what we know, the ETH inventory is short and we have a gap, there's a couple possibilities. If the ETH inventory is short, so you got all these sellers in there, you might get some profit taking from the shorts from yesterday. Oh, we get a gap. That's lovely. Now what do we do? So if we get a gap, we can get continuation sellers and longs bailing, whatever, getting stopped and whatever else happens to them. And then we can get short covering. So we know this if you're in TraderLab. Now the problem, it's not really a problem, it's more of a challenge because of randomness is, where does potential short covering and rebalancing of the inventory from the ETH come in? After that continuation selling, do we get a short squeeze? Or basically absorption by the buyers. Now, are the buyers getting long or are the buyers weak buyers and being squeezed? You need to understand the difference between a squeeze and initiative behavior. So initially coming in, continuation selling, trap late sellers, get the sell stops out, and then short covering by those to rebalance the inventory, and then looking for continuation shorts. Does this make sense? All of this is trade plan specific. All of this is what, in my opinion, you can learn if you roll up your sleeves and do the work in the TraderLab. There's no cost for TraderLab. What it's going to cost you is changing what you believe the business is, developing a business plan, understanding what this business is, not what the fantasy is. Remember 55, this area is a key location right here. So I know There's my gap. And what am I anticipating? Well, either continuation selling or short squeeze. Well, this might be my buyers right here, the gapateria. Open lower. Now this is the high volume. It starts at RTH open. This yellow line's called volume point of control. Again, all of this is in my previous streams. I really don't want to spend too much time. So what we have is, what are we looking at here? Well, with this gap, and the fundamentals, knowing what they are, not the news specifically, but the environment we're operating in. And we know the environment, geopolitical aspects, increasing inflation, and I can suggest potentially much more inflation in the pipe, much more devaluation of the currency, the US dollar in the pipe. And again, not a recommendation, just saying, personal opinion, not based on anything but some experience. So statistically speaking, if we open lower at a range, now here's some statistical probabilities. Past performance not indicative of future results. Grab a pen and paper. All these statistics are available in the TraderLab as well as everything else. Library of webinars, structured trades, and of course the TraderLab community. It's open to all of you and there's no cost. Taking out the first hour's high or low, it's called the IB, initial balance, is about a 98% probability. Which one do you think it is? Taking out the ETH high or low, a 91% probability. Getting to the overnight volume point of control. Where is that thing? Lost it. Hold on. It's covered up. What do you guys, can you let me know what the overnight volume point of control is? I can't see it. I think it's 46.5. I can't really tell. Maybe not. Overnight volume point of control, TraderLab. I need it. $808? Okay, thank you. That's why I probably couldn't find the darn thing. Wow. Yeah, it was up near the high. That's right. Hold on a second. Okay, overnight volume point of control, ETH high. But what else do we know about this thing? Isn't this 809? Where was... Oh, boy. I got so much stuff here. Where was yesterday's low? Let me see if I can find it. Wasn't it around 8? Yeah, right. Okay, thank you. So what does this tell us? Let's come back to the language of the market. ETH high, the high volume price is here. And this is yesterday's low. What happens if we go, I'm not paying that? And we get in the car, we leave. And what is this? The retail price from the ETH, the high volume. But what is happening? We are rejecting this. Now we're into the auction. I'm not paying that. Off we go. And this is called the value area. Yesterday's retail price is here, the highest volume, I should say. Naked volume point of control, which is here at 70. I got too many levels, not enough time. One moment. Let me just see. Yeah, 73. This is the retail price from yesterday's RTH. So basically you have, I'm not paying that. We leave. We have the fair area from yesterday, two-sided trade where we had our sellers and we got our short squeeze. Who knew? This is the retail price from yesterday, high volume. Remember, shopping. Yesterday's low is here. Okay. And 55 is what is the big kahuna, or the big over under or fair price in the intermediate time frame. So going back to statistics, 80% probability to get to the overnight volume point of control. Well, it's at the ETH high. What do you think? I'll let you ponder that thought. Getting to the ETH low, about a 72% probability. But getting to either the ETH high or low, 91% probability. I'll let you figure out which one maybe is more likely. Taking out the previous high or low. Now this one is important, and this one kind of played with my head a little bit, but I just have to take my trades. That's filling the gap, right? So we know there's about a 67-68% probability-ish of filling the gap. And let's see what else. there's more, but this will work. Okay? Is everybody with me so far? So these probabilities, but here's the thing about statistics. What happens if you have a high probability statistic that says we're going to go up? But the condition of the market is telling you something different. How do you prioritize that? Well, in the TraderLab, the number one element is something called context or condition of the market. And context is something that happens in all time frames, and let's take time frame and change it a little bit to rotations. So inside of time, the market, as I showed you, always at the top of the stream. Market goes up to go down and goes down to go up, and it's doing it because no matter what rotation you have, there's always somebody on the other side, and that means there's stops. So what are we anticipating? Market opens lower, gap. What about the shorts, and what about the sell stops? Right? So I'm under yesterday's low. What's under here? Stops. So they're out. Thanks for playing. So those become market orders, stops, right? And the shorts from the ETH. What am I anticipating? Well, continuation selling and possibly a squeeze. So I can get the following. Think market rotations and FOMO and fear. Think how you work, because most retail traders have the impulses, but they don't control them. The impulse says, I got to get short, FOMO. What's the way the market works? If we get profit taking in a counter rotation and we have our gap here, and we have our retail price, naked volume point of control, and the intermediate time frame fair price, I can come up here, and if this is too high, this is all market mechanics based on the auction, I can look to sell it. Now this is where things get funky, as I like to think, or not like to think, but it is the way it is. So my levels to lean on for continuation shorts are out here, and there's more. Hold on one second. Okay. I got to check a price here, guys. Give me a moment. $67. $34.50. Okay, so this is good. Okay, so this is sell stops are under here. That's fuel. That's the way I think of it. If there's or liquidity sitting somewhere, the market has a tendency to go there. So that is a target. Previous highs, lows, no different than filling the gap. It's all the same. I'm trying to move these charts around. Sorry, give me a moment. Okay, so I got sell stops here, but what else do I know? What else do you know? And I know I'm right. This is all before the market opens. So if you're not planning and anticipating, how can you not then be impulsive? So the idea of the business of trading is to know what you will do, not what it will do. We don't know. If the casinos don't know, how are you going to know? ETH low, over 90% probability. So what does it mean? Get short. What do we do about that? Good luck with that. Where do you get short? Structured trades. What happens if you take a stop? You go on to the next trade. Did you have a failing experience? Are you not smart? Did you not get approval? What? Watch. So resting liquidity is here. Breakthrough. Now I have sweeps. Okay. This becomes support. Let's just label this thing. Well, hold on. Okay, I'm going to try to go fast. I'd like to spend time just to show you development, and I'm going to show you some structured trades. So this is support, support, support. This is the developing volume point of control. This is where the volume starts and I leave it. This is where the sellers are hanging out. Notice the icebergs, passive orders. I have a sweep and I'm looking for a counter rotation. So I have the following: resistance, fair price. Now the idea of this using the volume profile is it's not an indicator. All it's doing is measuring volume. This puts the responsibility on you to learn how to trade, not to just use backwards looking mechanical indicators. If it worked consistently, other than randomly, that's all we do. We just get the right mix, and then we'd sit back in our Barca lounger and go to basement and make that withdrawal from the ATM. I'm going to say maybe not so much. What do you think? Here's the thing. Are you waking up working hard and waking up with the same results, random winners, but you're still leaking equity? That's because you don't have an edge, in my opinion. So you may believe it just takes more work trying to fix this and make it better because you have winners. I did, but I didn't understand. Now, when I started in 1980, all my buddies were floor traders. There were very few off-floor traders. I was actually going to be a floor trader myself, and I guess I'm a little more analytical. I figured going down on the floor with my buddies, stabbing each other with pencils and spitting on each other was not exactly, I kind of was a little more cerebral about it. And I had shared an office with George Lane, who created stochastics. Now, don't forget, I started in 1980. Oscillators. In 1978, Wells Wilder came out with his book, and all of a sudden we had RSI and parabolic and MACD. Well, I don't think MACD, but I don't remember anymore. And, it was like, oh, here it is, finally. Look at that, the line crossed over. So I spent a lot of time trying to fix that randomness from any of these things to make it into something usable. This is called a variable high volume node. And what a variable high volume node is, at least what I kind of, from my research, I see this high volume, and let's step back from what you're looking at here in the ES, and let's just compare it to what you do every day, or almost every day if you go to the store, and that's shop. So the pricing in this store is high volume. And what's high volume? Retail. So remember, trading is just trying to figure out what's this thing worth. Why do we have a market? The job of a market is to try to find out what's too high, what's too low, and what's a fair price. Same thing you do when you shop. The thing here is we're in real time, so the pricing is changing, whereas in the store, they don't change the prices so much. How about that's a high time frame? And since we're in rotations, time frame specific. So you have to identify your time frame, your edge. This is where the work is. Sellers are here, break above, support, retail price. Break high, more volume here, new retail price. Now let's look at the story. If these guys, once I break below them, and this is just an idea, it's not a recommendation, they come back in here. The retail price now is here, so that's too low. And what's the possibility? This is too low. We go higher. Don't forget, this is resistance for me. Who knew? And then break low. Support is here. Resistance is here. But what do I know? What I know is south of the border, get short, at least for me, my time frame, and wear a helmet. So what's this? This is a short. This is a short. This is a short. And stops, I took some stops this morning trying, it was like, I felt like I was at the rodeo, So now, this is too high, so that's resistance. Okay, so this was where I started out. Now remember, this is a problem because this is the fair price. And let's look at multiple time frames. In the developing time frame, no time, but up to you, this is the fair price. If this is too high, now this is the fair price. But what happens if you go to the store and you look at the price of tuna and you're going, man, I'm not paying this. You leave the store. Now, this price, which was too low, might be now too high. What can I do with this? Here, I can sell this. I can sell this, that. My stop can go there. And again, these aren't recommendations. And what do I know here? Right? Short covering. And again, don't forget this. So these are all shorts in TraderLab, and I'm trying to go to ETH high and take these stops out. Who knew? Right? So let's see what we get. Now we have a sweep. What does the sweep say, Tom? The sweep, and this is what makes order flow and Bookmap such an incredible asset for day traders or any kind of trader. Time frame is not the issue here. It is understanding market mechanics and adjusting and building a plan to your time frame. It doesn't matter if you're a position trader. When I managed Dow funds, and it was a substantial amount over the years, I was using similar processes but in different time frames. When I was running options, I was doing them in different time frames. I used to be a swing trader and position trader. It's all the same. Once you understand how the market works, you extrapolate it to your time frame. Now, this is day trading. So what am I doing here? I'm taking the things I've done for going on 47 years, and it's certainly evolved over those years of trading. And I spent, unfortunately, too many years with a defective process trying to fix it because I didn't understand the business. Nobody told me. There were no books. Nobody talked about gaming. No, everything was about being right and predicting. Measured moves. Remember those? Well, that's the first thing I learned was measured moves. You know, your head and shoulders, your this, your that, your pennants, blah. And I learned it at CME. Now, what's important about that is I said, this is the way to trade, right? Look at that. It went from here to there. So where's the market going to go? It's going to do this. Prediction. How about there is none? I didn't know that. So I was always trying to get it right. But I didn't know what right was. Right isn't being right on your, quote, prediction. There is no prediction. It's random. What's being right is knowing where an edge shows up and acting accordingly. What's this? Too high. So, too low, too high, short, support. For me, if I get short here, now I know I'm trying to get to the ETH low. So, and this shifts down. What's the language? Remember, this is a foreign language, guys. This is not indicators. What do you need that for? I'm sorry. You can use them. I'm just a little, let's just say, biased because I spent years trying to fix a defective process. Our nature is to look for certainty to avoid risk. We're pre-wired to bring beliefs to this business that have nothing to do with it. And don't feel bad about it. We all do it. The thing is, if it's not working, I call that trader groundhog day. Break low. This is a short. This is resistance. I'm going to draw a little line here for you just so you don't forget. I always forget, so I draw lines. I don't remember anything. And the reason is this is going to scroll off the screen. I am integrating Bookmap with other tools. But this is where the financial rubber meets the road. This is where I can get down to nanoseconds, if I could see it, which I can't, but I'm able to see the participant behavior really at a level. Now watch. So what happens here? Too high. Let me get this in here. Too high. I'm out of here. New retail price. What about this? Break low. Too high. What's this? Break high. It's the opposite of this. Remember? Break low, short. What about this one? Break high. If that's too low, what happens? North. Where's my resistance? My liquidity, my sellers were, remember, there. Now, this might be too much minutia for you, driving nuts. I apologize. I just want to show you some things. And I'm going to try to move quicker if I can. So this liquidity, so this is here. There's the iceberg. So we have our sellers. So what do I know? My sellers were selling this. If I break below it, my sellers are back here. My sellers are here. This is liquidity. Think of it like a hand, the invisible hand. If you don't have an order flow tool or understand reading the dome, which I don't want to be looking, at the limit order book, I want to see this. This is showing me where the liquidity in the passive sellers are. It's a hand. I got them there. I know retail price is too high here. I got these guys here. This is too low. So what does it tell me? I can counter rotate. As soon as I see this, I'm looking at counter rotation. This is where the teeth chatter. It's like, watch. Here. So here's what happens. Get short, get scaled, going for the ETH low. Got this. Look at what happens right here. Warning Will Robinson moment. Where's my resistance? It's here. What else do I know? Opening swing high. And where's my level? Around 55. So I'm already looking back here to sell it again. I already know that. If I get taken out, I'm already going to put a short on at another level. It's all auction based. Now, there's no precision in this thing. You got to understand the problem. What's the problem? Randomness. Write this down. Random. So what do I know? I know above here is the opening swing high. So if I get involved around here, this is pretty risky. Now, everything is risky in trading, but my opening swing is here. Am I going to run in here with buy stops from these guys? Remember, how does the market work? Market goes up to go down. What's in here? Shorts. Remember what we were looking for. Remember the plan. Go back and review the stream. What's the plan? Sell stops coming out. ETH inventory short. Potential for short covering. Then continuation selling. Now, what happens after that? No clue. I know. I don't know. So I'm not here to be right. I'm here to manage my trades, take the trades that have an edge, and then take the random distribution of outcomes. Instead of the right, wrong, which is how we are emotionally attached, ego, getting validation that we're so intelligent, our self-esteem has no place here. It doesn't exist in this world. You're on an alien planet. So what do I know? Let's go back to what we think we know. Resting liquidity. There it is. What else do I know? These are key levels. This is a retail price from the last time we were down here. That was what? Too low. If I get below it, then I can test it from the other side. Same as these, just different time frame. Resistance, resistance, resistance. So I'm looking here and my teeth are chattering. So I'm looking for a couple of things. I'm looking for the opening swing high to get taken. I already have sellers lining up over here because they know where the stops are too. And if you're an iceberg, you need the liquidity. So you can, because you're a passive seller, you need market orders, right? So what are market orders? Buy stops and of course initiators. Good luck with that, but hey, that's their business. My business, I want to use retail trader behavior. Think like a retail trader, but don't act like one. Their stops are over here. What am I doing? I'm not running in front of them. If they get taken out and then I see my sellers, I want to join the sellers somewhere. So let's look. See? So now I'm at my location. Now I'm into my liquidity. Now I've taken out these guys. What were you doing there? I don't know. And what about these guys? Opening swing high. What do you think? Do you think it would be prudent to short in front of an opening swing high when you have what? Buy stops. And we found too low. You see? So, it's on sale. So now what? I take out the weak shorts. Remember how the market works. The market goes up to go down and goes down to go up. The market goes up to go down and goes down to go up. Now what? Now this is where things got interesting. Let me show you. So I took a short here and my goal was to go here. It's called mean reversion. I don't mind telling you, I take trades, and I get, I take my, I pay. Why do I pay? Because I'm protecting my account. I'm sampling the market. Now, when you start thinking mentally, what you're going to be doing, because we're human, is you're going to be needing to be right. I had to overcome these emotions with the idea. In other words, I had to change it. And the way I did it was I started thinking about, well, I know unless something changes, and based on my plan, it hasn't. It's just where do I get short? Quote, where's the right place? The right place are my structured trades that have an edge that favors me. What is going to happen? How about this? Clueless. So now take that off the table. Next thing, what happens next? I take my trade, and if I get taken out, which I did here, then what am I doing? I'm thinking, well, I'm sampling the market. I'm not predicting. I'm not even in the business of being right as far as the outcome of the trade. I'm in the business of following my plan that has a tangible, statistical edge that favors me. I'm not in the business of predicting. I'm in the business of alignment. Write that down. If you're trying to be right and you're all hung up on being right and you're focused on P&L, that's a problem, because that's what most retail traders do, and you know the outcome. Why is the outcome so poor for retail traders? They all do the same thing. What do we attempt to do in TraderLab? Understand retail trader behavior. Learn from retail trader behavior. Use it as an asset. Think like a retail trader. Don't act like one. So here I took this. My scale was here. This is called mean reversion. And I always joke, yeah, it's mean. Mean reversion is rotational trading. And what do we trade as day traders? Rotations in multiple time frames. I think of time frames a little differently than most of you do. They're not specifically clock based, though, like the RTH has a fixed open high low close, right? Fine. The ETH has an open high low close, right? But and the close of the ETH is the RTH open. So those are time based. But after that, it's not for me. Again, not saying right, wrong. I don't use time. I use distributions of volume and swings, because the swings, edges outside on either side, tells me where the opposite force came in. That's more important to me than taking a week or 5 days of trade and imposing something over something that has nothing to do with the participants. What is the clock in different time frames? So anyway, think of this like a vertical integration of time. So right here was my resistance. And what is this saying? See how it behaves here? When I break here, this then becomes what? Support. Maybe. Let's see what it does. Where does it come? Down here. Support. Now the problem, if you want to use it, and to me it's not really a problem, it's because it's randomness. So we don't know where it's going to go. If you got short, now remember where I'm trying to sell it. It was over here. And that's why this was my area to get short. So I was okay, taking the stop. Pretty excited about that. I came back down here. So when this happens, I didn't have a way in here. I went, boom, it's like, well, if I'm going to sell this, where am I getting short? Here. Why would I do that if I'm trying to trade reversion to come there? I can't. It's outside of my, my risk parameter. So right here, I feel FOMO. You notice? I feel FOMO, but my plan, I don't have a trade. So now I'm going, I gotta get in, right? That voice in your head, I call that Hyde. Jekyll and Hyde. Hyde, that emotional state you have, fight and flight and all this, it's emotional triggers. It's chemically based it's based on hormones and things that are released in your brain, fight and flight. It's chemical. So you need to anticipate these things, not impulse and respond. It's almost like you step in front of a bus, don't do it, and you automatically jump out of the way. There's none of this processing in your brain that says, oh, a bus, let me think about that. There's no time. You automatically respond. So it's primal wiring. It's the same wiring about don't get eaten by the saber-toothed tiger. What's behind the rock? Let's avoid the risk. Or you put put your hand in the fire. Maybe you don't do it again. Burn your hand on the stove, right? All of that pain reinforces avoidance. So when you take a stop, you're experiencing pain. So then what happens is you're already conditioned to avoid pain. So what do? You avoid pain. How do you do that? You look for certainty. Does it exist in this business? No. If you're certain, do you have a better probability with certainty of not taking a stop than you do with uncertainty? Guess what? You don't. So you can't overcome the business. You got to adjust yourself. Now, what do I have here? Now, this was my resistance. Don't forget, this is my location. Location. Think real estate. Now I'm going up. I'm going, oh, what's going on here? Truly. There's my support. This becomes resistance. Support. See where it comes from? Resistance. Support. Resistance. Now, break low. So right here, now I have resistance here and I have support here. And I'm trying, and remember, for me, just me, trend down. Where am I trying to go? Same trade as the other one, back here. This is called mean reversion. So this is a short. My stop goes up here. I'm trying to go here and come out the bottom. Let's see what it does. And I take stops. It's just as much the thrill for me as it is for you. This is my scale. And now my stop stays over here for me. And I'll show you, and I can't really discuss how I manage my trades because that's something that you have to find. The thing about trading, different traders trade in, quote, different time frames. I trade broad rotations, and for me, it's a risk-reward situation. In other words, I'm not interested in a high win rate. Back in the day, and I'm talking the Stone Age, when I built trading systems and I optimized, I was managing a lot of funds across a lot of asset classes. And don't forget, this is position trading. Short term for me was trading the big S&Ps 2 to 3 day swings. That was like day trading for me. And we're talking now in the mid 1980s. So there was no real day trading in the sense of what we can do. We didn't have the technology. All right. I mean, I used to pick up the phone, call my guy on the edge of the pit, so it was so different, So anyway, what's this? This is the mean. Remember how the market works. It goes down. What's in here? Buy stops. To go up. So we take out the shorts. What's in here? Well, this is most likely a squeeze. And I don't know if we're getting buyers in here. It could just be buy stops in this leg. Not my job. What's the trend? Down. This is my short. This is my target. Where's my resistance? Now, in my book, the way and I'm under my key levels, let's just put pieces together, and this is resistance. I don't know. What do you think? Let's see. This is a nice one here too. Now this is another short. I'm just going to show it to you. Let's come back to, see, this is why I'm drawing these little boxes. What happened here? Well, these are sellers. I get above them. I got more sellers here. I break below them. Now I can look at this and I can sell, and this comes back in. If I pop and I have a sweep, I can sell. This is a sweep. Notice how I'm just going to touch on the sweeps just for a second. And there's nothing mechanical. Wouldn't you like it? Me too. I see a sweep. I'm coming down. That suggests the potential of a counter rotation. Who knew? And it doesn't have to do anything. Look, you got one here. Tom, why isn't it going up? Well, it's not. If I break below it, now it's maybe resistance. Buy sweep. What does that suggest? South. You see? So what happens up here? I want to be short. My liquidity comes in. These are structured trades. I get the sweep, break low, resistance, trigger, short. Where to? Back there. It's called mean reversion. We're just selling this thing unless your time frame and plan is different. So this was too low, remember? So as I'm coming down, so I'm scaling. Now I know I had buyers here. See the liquidity come in? What might I do with that? Well, I do want to be short, but I might, number of contracts determines what you do. And I always suggest in TraderLab you start with what? A two lot. But the first piece of a two lot configuration is knowing that what is the probability of getting risk neutral with a specific trade so you can manage your emotional state and get risk neutral, and then with the second contract you manage it and also potentially trade towards a statistical probability. This is kind of what the business side is. It's plan based, it's not outcome based. If you have edge, outcome will be there and a random distribution. So I know my buyers were here, these guys come back in. Let's watch. So this could be a scale, or you're just holding your nose basically and you're going, where's my statistical? I got stops here and my statistical probability is where? There. What is it, Tom? Let me think about this. Lower outside of range. There's what? A 91% probability of taking out the ETH high low. I'm stepping out on a limb, as you know, here. And this is an outside edge in an intermediate time frame, and look at the liquidity. So if I'm going here, I can be targeting any of this. And I posted in, by the way, I don't post trades in TraderLab. I basically suggest that traders take a look at this. Observe such and such. I don't call trades because you don't want to take my stops, right? So here, this suggests counter rotation. My resistance. Now, let's come back to the profile. Let's come back to language. What's the language? Well, you notice there's only 8 contracts up there. What happened to my buyers? We'll see you later. Now, I have to be concerned about the gap, because getting into the gap is about a 68% probability. In other words, testing yesterday's low. It doesn't mean it won't happen, but the fact it didn't happen shows you urgency by the sellers. Let me ask you, do you want to be a buyer? Do you want to be long? Now, if you're a counter trend trader, that's fine, because the only reason you would do it is because you have an edge. Otherwise, you wouldn't do it. Me, not so much. But that's just me, my time frame. Other traders in TraderLab are going to be doing whatever they do. This says counter rotation. This has a high probability. And then, where's my liquidity resting? 100 comes in here, and it's right there. This is a intermediate time frame important level, over 90% probability. Sell stops are here. What do you think? Watch. Sweep here, sweep here. This says counter rotation. This one I ignore, because I'm concerned with the rotations. Target. Now, you could be done, or you got more. Let's look. Now, at 9:30 Central Time, my time. Now, let's mark these things. You're going to find this interesting. So far for me, shorts. And now, what you do, how you do it, where you do it is completely up to you, right? Isn't it nice to know that you absolutely have control over your business up until the point you push the button? You have responsibility and control. The market is random. You have no control. So the casinos, and let's just use the casinos as our template, because that's our business model. They only have control of what they do up until the point, when they're playing the game, they deal the cards. Once those cards leave the deck, it's random. Cards are random coming out, and how the gamblers play the cards is random too. So, but they have an edge. They're not changing the game like we do. What do? We're fearful, we skip a trade. So now we're starting to skew the odds away from ourselves. If it's vetted and it has an edge. What do? Oh, I took 2 stops. I want to be sure on the next we change our behavior. What do we do then? Well, I got stopped to the tick on this last one. I'm going to move my stop way away. I don't want to take another loss. All of these are the things that take you out of the business. Or another one, I took 2 stops I'm going to move my stop and really trail close because I don't want to give it back. I want to make up from the last two losses. What are you doing? You're putting yourself out of business. You don't have to believe me, but I'm going to ask you, how's that working out for you? We all do the same stuff. This is a short, and let me show it to you. I was very active this morning. You know, I primarily trade up until the time I do the stream, and then take a little break, get some oxygen, visit with you, and then either trade again after I'm done. Don't forget, it's FOMC today, so, that's up to you what you do, but that's not a time for retail traders to be active unless you have a specific plan for FOMC. I have a specific plan that I operated. But the other part of it is, if you feel compulsion to trade, that's a dopamine thing, and it's almost like a drug deal. You're under the influence. You need to understand your hormones and your primal wiring. Most of us spend most of our time on setups and being right. You only need one that has an edge, and you can potentially become a profitable trader. In fact, in TraderLab, it's a proof of concept. Would you like to build a business from the ground up? What you're going to have to do is, put it this way, deconstruct what you're doing now if you don't have a sustainable process. Forget the random winners. You could throw a dart at a board and have a winner. What does that have to do with building a business? If your overhead, if you go out of business because your losses, because you don't have an edge and you're gambling. Have you ever gone to a casino and hung out? How'd that work out? Do you actually go to a casino and gamble and expect to walk away with dollars? Well, would you think it's any different here because you don't have an edge? So this is a short. This is where the buyers were. So this is a short. This is a scale, and then looking to go out the bottom. And 9:30, let's come back to another thing. At 9:30, we have something called the IB stat. Remember that. Taking out the first hour's high or low, and is about a 98% probability. This is the first hour's low, and it locks in at 9:30. So 98% probability. Let me ask this astute group of traders, and those of you visiting in YouTube, what do you think? Might you sell this? If you get a shot, and this right here, this is your resistance. So if I take a short, I'm going there to there, and then 98% probability, and I hold my nose. That's the end of it. Nothing more to it than that. One moment. So risk neutral, looking for the 98% probability. Now right here, I get absorption. And this was really interesting. One second here. I got to check something, guys. One moment. Very interesting. And this is not something, this is just part of trade. You're going to see something interesting here. I always think it's interesting. This is where the buyers were, and this is really, so the buyers are here, and there's my sweep suggesting the counter rotation. So there's my sweep. This is my resistance. I get below, having a wonderful time. Going to zero, right? 9:30 is my IB, 98% probability. This is a short. This is a scale. This is teeth chatter, no clue. Come down here. Now, IB, 98%. Going to zero, Tom. Having a great time. Watch. Now, in profile world, market profile, that is. In fact, I learned market profile in the mid-1980s from Peter Stottlemyre, who actually created it. He was a grain trader at the CBOT. Okay? So he actually taught it to me, which was pretty neat. But here's the other part of that story. I was mixing it. I said, this will make what I do better. And what I was doing was adding more random inputs in a random environment. So there's an old saying from the early days of computers. Garbage in, garbage out. Random inputs are garbage, unfortunately, because you can't measure it and it'll give you random winners, but you can't vet it to know you have a statistical edge. So this is a sweep. What does it say? Counter rotation. Now going back to the profile, this is what I know, and I'm going to give you some minutia. Again, I don't have time. This is a distribution of volume. Now, what does all this mean, Tom? What are you talking about? This here, so this is what I have. Resistance, I'm not paying that. So this, buyers are here, sellers are here. See the icebergs. Break low. This now becomes resistance. Going to zero. Come up here. Short, support, going to zero. Where's my buyers? Here. So, and let's just watch. These are structured trades. Now, what you're saying is, gee, I don't know. And I'm going to go, I don't know either. So, I don't know. You don't know. Can you be in an environment that requires you not to know? Do you think when casinos or the dealer deals the cards in a specific game that has an edge, that anybody knows the outcome? They don't. How can you? So all this energy you put into being right and predicting, wrong environment. Where were my buyers? Here. Here's my IB. And here, what is this? There's a sweep. What does a sweep suggest? Potentially. Counter rotation. You see? Doesn't always happen. Nothing always happens. This is trading. It's like, maybe. There's a sweep there. Didn't go up, it went down. Here's a sweep here. Now, right here, and this is pretty important what happens here. I get the sweep, and I don't know. It's like, watch. So what do I know? I know I have sellers here. I have the sweep. The sweep says south. The sweep here says north. In other words, rotation. Now, what it says, let me really clarify. It doesn't say it will. It says it might. Write this down if you're visiting in YouTube or elsewhere, or if you're new to TraderLab. And again, remember, TraderLab's available to everyone. There's no cost. Okay? It's a community of traders who come together to leverage their collective experience. It takes a village or a community to do the work. Data mining, research, mutual support, psychological support. The biggest obstacle to trading is not learning how to trade. It's dealing with yourself and the obstacles psychologically. That's the bigger obstacle. I believe anyone who comes to TraderLab and does the work can learn how to trade. This is not complicated. Do you know what it is? Random. Now, you're going to confuse randomness and complexity and use the terms interchangeably. It's not the same. In fact, we have a psychologist in TraderLab, and he's 20 years, and he's a full-time trader now, and he's been in TraderLab, and we talk about the psychology, because learning to trade is not the problem. Trading is the problem, isn't it? And the problem also is if you have a defective process, you won't even know because of the random winners. I call that Trader Groundhog Day. So what do I know here? I know I got buyers here. All right. What else do I know? Nothing else. I know the trend is down. I know I don't want to get long. And I know I have over 90% probability, 98 I think it is, to take out the first hour's higher low, and there's my buyer. And no way to know this is the current low of the day. Which is it? Maybe it is. So what happens here? Where's my resistance? Isn't it up here? Let's see. There's a sweep. There's resistance. Let's just see behavior. Notice how this works. If I break high, that becomes support. You know the concept. Support becomes resistance. Some things don't change. Now, I was still taking trades up here. I got to try to show you where. I think I took, this. See this? variable high volume node, outside edge. So let's think of this like a store for a moment. What is this? This is a distribution of volume. This is what the volume profile is all about. When the volume dries up, think about if you went to the store. Let's go shopping together for S&Ps. And in any rotation or any quote time frame, if we run out of buyers, what happens is the market can go up, but there's less buyers. You go to the supermarket, you need tuna for the casserole tonight, and it's $4 a can, and you did all that work, and now, but you don't have the tuna, you ran out. There's less buyers at a high unfair price, but there's still buyers. They could be buy stops, right? They're buyers. And who knows, maybe it's going to the moon, Alice, no clue, but I have my location that was, what? Too high. And my outside edge. You run out of your buyers again. And I got VWAP and mid. And what else do I know? By the way, I could sell this too. In fact, I think I did. I don't remember anymore. This is not my favorite trade. This is like, I really don't like this, except if I sell this, I got the sweep, I got the liquidity, and I also know retail trader behavior, which is mechanical. So the VWAP and the mid. Okay, I can do that. Where's my support? Isn't it there? So I sold this, got scaled, got taken out. It was like, you know what you say. Me too. I come out here. Now this is the better trade. Let me tell you why. Mechanical retail traders, and don't forget the gamblers get paid. They deserve to get paid. We pay them it's the way it is. Let's get over it. Here's what I know. Don't forget, this has buy stops. So if I come up here, I got to look left, and I know there's going to be stops here and here. So when I come up here, I know I'm in a weak position. It doesn't mean I don't take the trade. It means I understand how the market works and I don't know what's going to happen. So if I sell this, there's my sweep, there's my trigger. I scale here and then I'm trying to come back across the range. If I get taken out, now I like it even more. And you're going to say, well, why would you like that? Because now I've got the stops out, the mechanical retail traders. What happens to them? Statistically, not good, right? So if I come up here, which was what? Too high and outside edge, what am I going to do? If my plan says sell it, I'm going to sell it. And now I want to come across the range because I got these guys out, the mechanical retail guys. And who knows? They get paid, Watch. So now what? Short. Where am I trying to go? Back here, same. So there to there is the same trade, other than understanding that this could very easily get taken out because that's retail traders and they don't sustain themselves statistically. This is the better location. I often skip this trade because this is what I look for. I don't want to do that, but I had to do it. Why? I had a structured trade and I had this. When I know what's here, I can take the trade there and also pay with a stop. Is everybody with me? So short, look at the location, right on the head, right on the noodle, right there. Sellers are here. Sellers are here. Sellers are here. This is a TraderLab structured trigger. The high volume, I'm just going to take you down in quote time frame so you could kind of see. And it'll get noisy here with these lines, so apologies for that. Let's look to the right. And so we know this is too high. In this consolidation, this is also an auction. My sellers are there. There's liquidity. And where are my buyers? Buyers are there. You see this red delta? Why did it go up? They were absorbed. There's the iceberg. Is everybody following? Now, if it goes up, And I get my buyer. Where's my sellers? Well, there's my sellers on the other side. There's the liquidity. So I have buyers here, sellers here. Who knows, right? Up, down. Tom, what's it going to do? I don't know. Trigger. The sellers are now below the buyers that were there and also the buyers that are here. This high volume right there is the same as a volume point of control or a variable high volume node, just short time frame. So when I'm doing, think Matryoshka dolls, you know, they're vertically integrated. So I'm trading multiple time frames, if to use that term, and they're inside of each other. So I'm kind of moving in and out kind of with a lens to trade these rotations that are all inside of each other. And I'm trying to align with multiple time frames. And like you and everybody else, I take my stop and I move on. Anyway, this was my short. This is my scale. Remember, same trade. All I'm doing, they pick the stops, squeeze these guys out. Thanks for playing. They got a coupon to the buffet. And now this is really the good trade, in my opinion. And same scale. And what else do I know about this? Sell stops are going to be under here. Okay. So short. Where's resistance? Isn't it there? I think I added. I don't remember now. Can't remember anymore. Oh, no, I didn't. This was my last trade. This. I was sitting in this and I know it's time to stream and my teeth are starting to chatter because I'm going, oh, John, I shouldn't have put that trade on. You know, that kind of stuff. You shouldn't have done it. Well, I did. And so I got my scale and then my entry was up in here. And then where does it fail? I'm trying to remember where it was. I think I moved it here. I got taken out. I know that. Oh, there you go. Well, who knew? Let's, okay, we're in real time now. So let's just look at some structure. We have this, and now we're going to look at the real time market, okay? So I'm going to narrate this for you. It's not, none of these are buy or sell recommendations. This is just market mechanics. Look at this sweep. This says the potential for counter rotation. Where's my support? Let's just move this stuff around. Now, when I'm doing this is what I do. And again, I just do it because I need to be organized and I need to know. The beauty of having a high tier order flow tool is not to predict, but to anticipate. See, this is resistance. This is support. If I get a short here, I am trying to go there and here. If I get a short here, same thing, you know, I'm trying to go there. If I was not streaming, I'd be taking more shorts and I'd be trying to go there and wherever. And I do have a target. Remember, I have a target. And these aren't recommendations. It can do anything, right? I got another target down here. Who knows? Not my problem because I have no clue. I have resting liquidity here. So when I see this come in the book, and right now there's about 200 and change, you notice it's higher than anything else. This is where the heat map comes in because I can see it. It doesn't mean the market will get there. That could be hanging out in here and the market doesn't have to ever go there. This is not predictive. These are already here so I can see it and then I can anticipate what might happen. Now, what might happen? These guys, if we get down here, they might interact. Buyers, if I get under it and I don't get back above it, potential continuation. What about this one? What about this? What is that, Tom? Support. What is this? My sweep. What does my sweep often suggest? Rotation. What does my sweep often suggest? Rotation. Let's see what it does. Is everybody with me? You have any questions? Post them. Again, if I had more time, I'd spend more time. But I don't. And also I'm a full-time trader, so this is sort of like a lunch break for me. The only time I feel a bit conflicted is when I'm not taking the trades that I would be taking. And I can't call trades because what I do is not the same as you. But I'm going to say that if there's a library of webinars and a document section that's available to all of you in the TraderLab, as well as the community, of course. And you can learn to think differently. What is the language, by the way, Tom? I'm not paying that too high. What is this? For the day, remember multiple time frames, no time, but basically this is the retail or highest volume. What does the market tend to do? If this is too high, same as that is too high, I can leave it because I'm trying to find too low. If I find too low, then I can rotate back here and maybe up above. Because what happens is, this is just market mechanics. If I have sellers here, which I do, and I have this sweep, and I have my buyers in here, don't forget, no longs for me, not a recommendation. You want to get long, your business. Me, not so much. I'm not any good at picking the high and low of anything. Not my job. My job's alignment, not prediction. It's a big difference, isn't it? You try to be right. You try to predict. Human nature. Avoid the pain. How about you can't? How about changing your experience and your perception of what's going on here to random distribution? And instead of right, wrong, as far as the outcome, what we do is we're sampling the market to extract an edge. The only way you get your edge, see this, is to sample. That means, is this the right place? I don't know. Oh, it's not. Oh, I took a stop. Well, good job. You followed your plan. Where's the next location? Well, I got to wait. Where is it? If I take this, which I could, this is a TraderLab short, I got to scale here. Actually there. I could do that. You could do it. I can do it. What do we have over here? Look over here. Isn't this the liquidity? Right? I'm going to move this out. If the liquidity is there in this, so I have all the selling, I'm just going to show you some simple ideas. Why do we make trading so complex? It's already random. Let's keep it simple. It's already difficult because of randomness and our emotional attachment. This is where the sellers are. If I come up here, I can sell this, but where's my buyers? Wouldn't you? And this is a structured trade here. This is called VPOC migration. I made these structured trades up. I've shared them in TraderLab. And again, not trade recommendations, and there's nothing mechanical. Hate to disappoint you. If it was like that, we'd all buy a book and do plug and play. How's that working out for you, by the way? Didn't work out so good for me. I just said, wow, I have all these winning trades. Can I just get more? Let me tune, tweak, add, remove, more indicators, more certainty. It was the opposite. Because all I had was noise. What is it? Garbage in, garbage out. Random winners. We had a magic 8-ball on the trade desk. That thing did as well as anybody, because you'd ask it, is this going up or down? Should I get long or short? And we would say, ask again. Sweet. Remember this. This is important for potential counter rotation. This is your scale. Now it's trade management. Let's watch the behavior. We're using order flow, resting liquidity. We're looking at icebergs who are buying. And you're going to say, oh, the icebergs are buying. Should I get long? No. They're in a different business than us. Okay? We primarily trade against other retail traders. And if over 90% of them lose and cannot sustain themselves. So write this down. Think like a retail trader. Don't act like one. Your impulses are the thing. Playing a video game, FOMO, fear of loss, those emotions, that'll take you out of the business. What I had to do, first of all, I didn't understand emotional triggers. So for years I tried to eliminate them. Behavior modification. I didn't understand. So I said, I want to suppress my feelings. I want to suppress them. Well, that's not possible being a human. You're still going to feel it, right? You can have think about your reptilian brain, or you might say your primal wiring. The reason we were able theoretically to crawl out of the primal swamp is that, before our intellect or our consciousness developed, which is on top of this limbic system, which is sort of the fight and flight thing. So it's rather basic. Intellect or consciousness does not interrupt it. So intention doesn't change outcome. These are primal forces. This is like survival. This is not just, no, this is it. Survival. You're either, if there's a saber-toothed tiger behind that rock, you are dead. You're not going behind the rock to look behind the rock until you're sure, right? Well, there is no sure in this business. So now I know I'm going to have these impulses because the market is random. When I'm making a decision here to put a trade on, it's uncertain. Is this a saber-toothed tiger? My mind or my primal wiring has the memory of being bitten. So I'm looking to make sure. Well, there is no sure. So when I'm here, what is triggered? All those primal emotional states to protect me. The primal wiring is not clued into trading, which is random. All it knows, it recognizes uncertainty, and that triggers a built-in response to protect you. So instead of getting where this, I need to be right and I'm going to predict, your primal wiring is telling you don't trade here because you might take a loss or pain. Remember the pain. The pain of a loss is equal to a saber-toothed tiger and death as far as your primal wiring. It doesn't differentiate. So you have to learn about your primal wiring. And then you have to anticipate it. What I had to do was, in other words, if a trade gets away or whatever, the market runs away, immediately I feel FOMO. I'm wired for that. It's no different than your dog will chase a squirrel because it's triggered, right? Instinctually or primally to chase prey that's running away, because the way it survives in the wild is food. So how do we survive? It's the same here, but we don't want to get eaten either. So now we're looking for certainty. So everything is triggered right here. Is it going up or down, Tom? Well, for me, it's going down, except this. So this is not a trade location for me. Where's my trade location? Last trade was here. Structured trade, So this is a trade I'd be on. It's not a recommendation. And all these other ones I've showed you, these are all, you can be, and again, it's time frame specific. Now I trade rotations. Why? I'm a day trader. I don't want to, when I used to manage funds, I didn't sleep at night. I had a quote machine on the side of the bed. And then now this will get you, I had back in, when was it? Somewhere, maybe 1984-ish, I had one of the first remote quote machines. It was the size of a calculator, portable, with a long antenna that you would pull up, like the old antennas on the cars. And I would take it with me when I went for a restroom break so I could watch my positions. Fun. Just telling you. Anyway, since once I stopped managing dollars and I just started trading for myself, I could sleep at night. Notice support, see the behavior. So what would you do here? Would you be taking this short because of FOMO, or would you know there's no edge here? See? And maybe you have the edge. See, what I'm trying to say to you is, I don't know where your edge is. Yeah, Kiloton, taking the handheld quote machine, and it worked. It was a radio kind of thing, like on FM, a sub carrier or some crazy thing, and you could only see one quote at a time. So I was trading the big S&Ps back then, and managing dollars also. So needless to say, there was a bit of tension. Buyers, sweep, that sets this up. Now, what do I know about this? There's going to be stops here. Market goes down to go up. Market goes up to go down. So I have stops here, and I have resistance potentially sitting over here. So we'll see what it does. None of these are trade recommendations. This is market mechanics. If I understand how the market works, I can't predict anything, but I can certainly understand that the market goes up to squeeze, down, up, down. What's the trend? Down, up, down, sweeps, counter rotation, VWAP, VPOC migration, structured trade, sweep material, says counter rotations in my future potentially, target scale, then trade management, wear a helmet, or whatever. Now the trade management is a function of the rotations you trade. And this is something you have to do. The work in trading is knowing where your trades are and if you have an edge. That's it as far as building the plan. Then the emotional aspects of this. Why would you even need a plan and not just play a video game here and have a great time? Well, you can do that, but that's just fun. It's entertainment. I think it's much better if you're going to play a video game here that you go to a casino with your buddies, put the dollars down, and have a great time because you're just playing a game. That's okay. But if you want to be in the business of trading, then we don't want to do what other traders do who don't have sustainability, and over 90% of them fail. If anything, we want to take what they do and what we all do or have done, depending where you are in your development, and not do it. Instead, think about retail trader behavior. Stops are here at the VWAP. There's also going to be mechanical sellers at the VWAP. But what I know is there's stops here. Stops, stops, stops. What do I look for? Not a recommendation. Too low? Squeeze. In a downtrend, if I can squeeze, I can take continuation trades until my plan says it has changed. In my book currently, and again, not recommendations, nothing has changed. It's just rotational trading. That's what day trading is. So if this makes some sense, don't forget, TraderLab's open to everyone. There's a link in the bottom of YouTube. There's absolutely no cost for it. You don't have to be a Bookmap subscriber currently or anything. It's available to all of you. And all you need to do is click the link in the bottom of YouTube, and you have to verify your Discord username. Now, I want to caution everyone. It's not romper room. It's serious business. We do have fun, but this is really about the business. Most of us in our development have wasted a substantial amount of time and resources and potentially dollars being trapped in trader Groundhog Day. Random winners, no edge. There comes a point where you have to kind of put a stake in the ground and say, I'm going to learn from my investment. I'm not going to keep repeating the class. Waking up a trader Groundhog Day is really kind of a message in a bottle. The message is you don't have an edge. You have random winners. And probably you have random inputs. If you have random inputs, you can't measure it, so you don't have edge. Then if you don't have edge or something tangible that's statistically based, what do you have? Random winners, but emotional triggers. Because if you don't have something to touch, all you have is emotion. And emotion is not your friend in this business. It's actually why most retail traders fail. So we need to understand why other traders fail. We have to look at ourselves and look at what we're doing, and are we doing what they do? And is it rational to expect a different outcome? So learn from your experience and then put a stake in the ground, and either you're ready to change or you're not, and that's okay. At some point you will be ready, or you're going to run out of your opportunity, because none of us have unlimited assets, and time. By the way, I'm still reading shorts, but there are no short trades. Why? Here's why. Here's the thing. I can read a short potentially right here, but why might I not take a trade? Just saying. Because of this. Stops. So I'm not in this, I got to get it. What I need to do is always be ahead of the market and think about what it might do. I use a process. It's very simple, and it's a conditional statement that I created when I built trading systems, when I was managing a rather large amount of dollars. And it's this. If this, then that. If not, then what? So if this, then a rotation, then that. It's not a short, by the way. If not, then what? If I can't get up here, then what? Then south. If I know there's stops going to be here, and there's my sweep, that says counter rotation, by the way. Same as this, sweep, counter rotation, sweep, counter rotation. But is it a trade with an edge? What do you think? Let's see what it does. Okay? Guys, I'm out of time. Please give a like if you're visiting in YouTube. Support the stream. This is what the TraderLab looks like. There's a library of webinars in here. I don't know if I can show this to you. See the short? It's not a short, but I'm just saying this. You can learn to read the market. It takes time, a lot of time, practice. This is the TraderLab community. There's a library of webinars. This one, the first one, the primer webinar, has about 37,000 views. You might want to find out why. You can use the link in the bottom of YouTube, and there's a full library. Ned, thanks for curating this for us, and a document section also. A lot here. Okay, I have streams in here that are over 4.5 hours long of real-time narration. If you want to see this in real time, and it's all available to you at no cost. And also, when you do visit the TraderLab, be sure to download the 60 PDFs of structured trades that I've shared. Remember, they're not plug and play. You do have to reverse engineer. These are actual trades, and some are just screenshots because traders were asking me, what are you doing? This is done from 2020, and a lot of this also was research-based. I was working with Bookmap developers. Thanks, everybody, for visiting TraderLab. Hope you got something from today. Look forward to seeing you guys real soon. And don't forget to leave a like on the way out. And thanks for visiting TraderLab. Appreciated visiting with you. It's always nice to see you.